Greetings traders, D7 here with freetradingvideos.com. The market's up big, so let's hit the ground running. Retail numbers come out beating forecasts. Very nice to see that. Then we had earning releases coming out that also beat forecasts, that really helped the markets take off. Check this out: the Dow up 1.5%, the S&P up 1.75%, and the Nasdaq 1.5%, and the Russell's a full 2% move. That is great. The only problem with this is the VIX, the fear indicator, should have dropped by about 3 times this. So I'd like to have seen a 4 to 6% drop in the markets. We did not get that. We only got a smidgen of a drop. So the fear indicator did not drop, reflecting a confirmation on this big bullish move. So just keep an eye on that. We're looking at the S&P daily right here. Wow, we come up, we hit support, and then support, and we crack down. We hit the 50-day moving average. We bounced up. Support then become resistance. And then it looked like we were starting to drop yesterday, starting to fall right there. But by the end of the day, we rallied right back up. And then after that, today, boom, the market popped over this trend line. That is just huge. To get up over that trend line took a lot, and having retail sales come out and beat forecasts, and those earnings that are starting to come out beating analyst forecasts is helping a lot. 1080 was a big number to penetrate, and it penetrated just that. We're closing right here at 1092. Very nice run. So let me just tell you a couple things that I'm looking at here. Let's pull in the spiders, which is the ETF on the S&P 500. Reason I like looking at this, because I can get a decent read on volume, on what's going on. So let's pull in some more data and show you this. If you see here, as we were heading northbound, see this big leg going up, we have been dissipating in volume. So look at it as participation, or look at volume like worth. The worth of this move was getting less and less. Now, if we zoom back in here, you can see this moving average is the 20-bar moving average that I have here. In this case, we're looking at a daily, so it's a 20-day moving average. You can see that on the down days, we had the increase over average volume on the down days. But when we started rallying northbound, going higher, we had dissipating or less than average volume. So the participation, or the worth of that move, is in question. Today, we broke this resistance, this high base right there, this resistance. We broke and we pop up, giving us what's called a dragonfly doji, which is a bullish formation. And we're right at average volume. Now, on a breakout over resistance, I would have expected a better than average volume day on that. I did not see that. So what are the warning signs I'm telling you right now? The VIX, which is the volatility index, is showing us, it did not show us a big drop. I would have expected a bigger drop on that. Secondly, I would have expected more volume. The volume is a little lackluster as far as I'm concerned. A positive, we broke major resistance. That is a huge positive. The second positive is, we did go to average volume. Not bad. The third positive thing is looking at the groups. As far as the groups are concerned, banks were over 3% on average on the growth for the banks. That is ginormous. They beat all other groups. That is a very bullish move when you have financials showing that, leading the pack and showing that sort of good bullish formation and good bullish pressure in the markets. You want those financials leading the pack, not lagging. So I'm going to go back here to the SPX. I'm going to show you something else. Now always remember this. I'm going to throw you a bone. I'm going to give you a nugget of truth, something you should write down. Never forget this. I look at this breakout as a breakout because we broke a major trend line, and also this high right there, this 1080 mark. You can see resistance. We come right here, resistance, and then we broke that. So I look at this as candlestick number 1. Now some people would argue that, and that's okay, because technically speaking we're still in an up leg. We do not have a down leg. One bar going down does not constitute a leg. So this is still one extended up leg. So remember that. So a lot of your stochastics and MACDs are going to look like they're wanting to roll over because of how overextended we happen to be on this. But let's say this is day 1 because we broke this resistance and we broke the trend line resistance. Day 1 of a breakout gets everybody all excited, but what I need to see as a trader is a close higher than that breakout day. If I can get a close higher than this with some increased volume, not dissipating volume, then I'm interested in loading up and going in and looking at some serious longs. So I told you in my last video that I was going to be very light trading because we had retail sales coming out pre-market, which happened this morning. We have the big CPI coming out tomorrow morning and pre-market, and then Fridays are usually historically kind of a lighter trading day, so I'm looking to make my big moves on Monday or Tuesday of next week, either bullish or bearish depending on what I see happen in the markets. So that's where we're at. That's what's taking place. And make sure when you're out there trading that you're always using a stop loss and you're not over trading. Make sure you're not over trading. And the reason we always trade with the stop loss is because what goes up always comes down. Know that the markets bounce around. Don't give back the profits that you have. Capital preservation is key. Capital preservation comes before profit taking. Always remember that. So there you have it. I'm long-winded tonight. I ran like a machine gun. I was feeding you with a fire hose. I hope you're able to get all that. You might have to hit pause a couple times and go back. So on Tuesday nights, it's the first 12 people that sign up will get a spot. If you want to hear more about getting mentored personally by myself, and then Matador, we team up and take on our students, and we cap it at only 8 people a month. First come, first serve. The first 8 people get a spot, and on Tuesday nights we cap it at 12 people who want to hear more about it. So if you want to do that, let us know. And all you have to do is just click on services and then go down to the mentor form and give us your information, and we'll give you an invite. It's that simple. Take care. Happy trading.